Good afternoon, everyone. BC Richfield here, coming to you live from London. It's just gone a couple of minutes past midday here, making it the same time UTC. A really big shout out to all of you joining us live today, as well as everybody that's watching on catch up. And it's been a really great start to the year. Team really firing on all cylinders. Just Pit absolutely crushing it. So got to start the show by giving my boy a very, very special mention. I think there's been 8-9 trades. I think all winners. He's just been firing them off the bat. Trading tank up close behind him to start the year, but the year coming in strong. So how are we all doing? Really good to have you all with us again. Thank you for all your messages. I'm really, really happy. Everybody seemed to have a really nice kind of festive period, whether you celebrate Christmas or not. It's always a nice time and a great time of reflection. Jojo, you legend, how are you doing? One spicy meatball. Good morning to you too, my friend, and everybody else. Apologies if I'm not getting your comments coming through. Sometimes they don't all come through, but if you are here and you are listening, very much welcome. And it is Wednesday, so it is our chart request show. Meaning that if you've got any tickers whatsoever that you want me to take a look at, let's get them up on the chart and let's see what's looking good. Like normal, we are going to obviously cover the upcoming news very quickly, and we are going to start with Bitcoin. We're going to take a look at traditional markets, and we are going to just make sure that we're locked in at the moment. We've got a nice kind of start to the year for risk, especially like crypto's done quite well. Just want to look at what's coming up, anything, don't want to be negative, of course, but we have to be realists as well. So as you can see on the screen, guys, we are still running our winter promotion, and if we're not and I'm wrong about this, then just message me and I'll personally discount the price for you. Okay, if you're interested in coming over, you can find the link in the description. You can find it on Crypto Burb's profile. You can also find it on my profile, BC_Richfield, as well as over at the Bird Nest. So without further ado, let's take a little cheeky peek at what's going on in the news today, shall we? Here we go. Right. So, a couple of things to look at. All right. Now, obviously, we came through, started off on Monday when we were talking about having the manufacturing PMI and manufacturing prices flat-ish. Obviously, data kind of washing through for that. A lot of that kind of been priced in. So we didn't expect anything massive. Obviously, Trump speaking on Tuesday night turned out, I wouldn't say to be a non-event, but there was nothing of real substance for the market to kind of dissect over the next few days, meaning we are heading into today. And 1:15, that's about an hour, just over an hour and 10 minutes. Sorry, just under an hour and 10 from now, UK time. That's at 1:15 p.m. Obviously, universally, it's in an hour and 10 minutes wherever you are. We've got non-farm employment change. Why is this important? Well, if we look at the previous figures, we were down 32,000, and forecast is for plus 49k. Now, if the figure does come in hot and we're seeing a lot more employment, all right, by the way, one of the reasons I use Forex Factory, there's a few different ones of these. They're all free. Well, not all of them, but most of them are free. Baby Pips do one as well. Trading Economics and Forex Factory. But what I like about this, and the reason that we use this a lot with students, is if you go over here, if you're wondering what these news events mean, and I filter by red and orange, but my focus is on the red folder news, means it's the highest impact. If you just click on the little folder here, it gives you all the information you're looking at, especially if you're new to the markets or you're learning, what does it measure? Estimated change the number of employed people using the previous month, excluding farming industry and government, all right? And then usual effect, actual being greater than forecast is good for currency. We know what happens often if we see a spike in the US dollar, that strength, can often detract from risk markets. So the other thing that we want to plug into here is the fact that the soft jobs market, with this data played in, the unemployment claims, etc., is actually supporting the likelihood of further rate cuts. All right, so it's actually quite a good thing for risk markets. So actually today, seeing a figure exceed this 49k, or even hitting it, really could just be a little bit of a stumbling block. So let's keep our eye on that as well. And then there's kind of double trap, especially for our intraday crowd today, including myself, is then you're very shortly afterwards at 3 p.m. Yeah, an hour and 45 later, smashing into the ISM services PMI and the job openings. Job openings again coming in with the kind of employment basket. So going to be an interesting day today for sure. And then unemployment claims tomorrow, and we're finishing up the week on Friday. Average hourly earnings, you've got non-farm employment change, unemployment rate, preliminary UOM consumer sentiment, and preliminary UOM inflation expectations. And that is your news update from BC Richfield. There we go. So trying to get through this quickly. I know loads of you, aren't crazy for the news section here, but I really, really, really can't stress enough how important it is to have a handle on these things. All right. So anyway, let's get ourselves onto the chart, shall we? What do we got here? Okay. So just let me get off of this. Just some trading from the S&P 500. Let's get ourselves onto Bitcoin and onto the higher time frames. All right. So has the plan changed? No. What was the plan? It's super, super clear. And it was to see rejection at this level, initial rejection, right? I said it on Monday. Excuse me. I had a couple of cheeky comments from people about being too bearish. But look, I'm not a bear and I'm not a bull. I'm a bear when it makes sense to be a bear, and I'm a bull when it makes sense to be a bull. And to me, it doesn't make sense ever to be bullish at resistance. You just need to employ some patience, right? Like, honestly, I can't speak highly of him enough at the moment. My good friend and wonderful trading team member, Just Pitt. All right. In fact, let me just do a little shout out here, because honestly, I can't speak highly enough of this guy. He started the year absolutely hot. I don't know anybody that's really in and around him at all for performance. So let me show you his Twitter quickly, right? Because he's a really, really tall guy, posts absolutely tons of all free alpha on his site, all of these. And he barely even shares a lot of his results, right? And if you go over to the Discord, you just see hundreds and hundreds of these absolute bangers, just like we had on this one here on SNX. All right. So the handle is Just Pit 5. All right. And look, 3,500 followers. It's a freaking joke. I know people with 100x that can't trade the markets like this guy. But anyway, the reason I bring him up, and let's get back to the charts, is because it comes from a very similar kind of background to me in terms of where we learn our trade and our craft, people that influenced us, for example. And he really is one of the best. He just looks at the market through a super educated, but boils everything down to a really simplistic view, which is what I like to do. And if we look at the charts, and if you're struggling at the moment, honestly, the best thing I can just recommend to people, and we're not going to make this too education based, hopefully started that off on Monday. But, and God, if anybody, by the way, is in the chat that can tell me why TradingView have stopped my back button or my Command Z feature working, that would be an absolute dream, because at the moment I'm having to manually make all these drawings disappear. But anyway, yes, Jack, yes, right? Look at consolidations, right, that lead to aggressive moves higher or lower. Yeah. So like this, right? And a really key way to look for this is to look for the gaps. Yeah. The failure in order pairing, the strength of the market going up, the inefficiencies, or the removal of liquidity from market makers potentially as well causes these. And then if you think about it, just makes a lot of sense, right? Because the market's then just asking itself a question, and it's saying, okie doke. Here, balance, yeah. People kind of agreeing on price in this area. I had the drawing to just, it is really buggy, one spicy meatball. Yeah, they do an amazing job, TradingView, and I'm probably one of their biggest critics. They do, provide incredibly good charting software. And I'm sure it is a really difficult thing to do, but there are a lot of bugs, especially kind of start of the year. They do silly little things as well, like remove the strategy tester from down here, and all of a sudden the back buttons and stuff stop working and you can't undo stuff. But I'm not the greatest with tech, in truth, mate, so I'm sure some of it's down to me. But if we look at these consolidations that lead to these clean moves higher, if not, when you're looking at a chart, let's just look at this as we come into this area here, right? Look for your flat highs and flat lows. Yeah, there are clear areas on these charts where price is meeting resistance. Take your horizontal drawing tool. Try not to violate too many of the bodies. I like to anchor to a body or a wick. But if I'm going to anchor to the body, make an allowance for the wicks as well, we can see we've got a really, really clean level up here, right? It's really simple. Price has expanded, and now this is a point at which the market considers this fair value, okay? If we're going to do the same on the lows, we can look here, wick, 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 wick. If I want to anchor that to a body, and you don't have to anchor it to a body, but it's a good way to start it, because then you can see the resistance coming into this area. And again, look at the expansion. For any of you that are looking to trade breakouts, mean reversion, whatever, look for price to expand into or out of a range. So this is our range, right? Now, let's look as price comes along here. And let's imagine that we've got all the information to here, right? Price comes up, set the low, set a high, retested this low, come back up. Now, we put a midline in a range typically as well, and you can also use volume profile for this. So if we were saying, for example, we were drawing this across to here. All right, and you can see if we take in the spikes of these kind of volume shelves above and below as well, yeah, so you can draw these out if you want to. Just kind of give yourself a little bit of adage. We've got a pretty clean area here, right? So bearing in mind, we're only into this point here. So what do? We long the low, we long the lows, we short the highs, we long the lows, short the highs, right? I'm not particularly keen for trading the midline personally. The POC here, the point of control from this range, gives us a nice midline as well, in and around where we would, if I was to draw a manual midline, it'd be around about kind of this area here. All right. But you just want to trade the extremes. Yeah, and you can see price starting to get heavy here, right? We're starting to reject at this area. Price did kind of have this initial breakout here, but then that's where it's really good to kind of combine these disciplines, all right? The use of volume. And I know, before the purists come at me on this, I know TradingView isn't the best for volume profiling. I know that, but it is accurate enough for most people to start learning before you go on to, something like, whatever, Sierra charts, ATAS, etc. But we can see the clear reactions here. Look at the long wicks showing us absorption, right? Price failing to get above that level. We have the failed auction, price comes back down. Then look at the breakout. Yeah. Look at the displacement. And what I mean by displacement is look at the gapping. Hey, Shay, my bro. How you doing? Great to see you. Then we see the breakdown here. We look for this area to be retested and then ultimately sold off. All right. So if we're just going to employ these same principles. See, there goes my back button. That thing's gone forever now. Let me just draw it back in. All right. There we go. So what we're looking for here, is certainly what I'm looking for, are just key areas that I can be involved in the market, right? Like, that are going to give me some form of high probability setup. So if we're looking at where price is at the moment, yeah, just get rid of these. If we're looking at where price is at the moment, we can just see really clearly, yeah, all these interactions, which has caused some kind of reaction here in the market. So ultimately, we're just favoring that trade. And a lot of people say, well, why do you favor that trade? Why not the breakout trade? Price ranges about 70% of the time. All right. So when you look at it in that respect, you're saying, well, okay, if price is spending most of its life in a range, chances are, we're going to be in this form of mean reversion. I've done that again, haven't I? Don't like this box today. I'm going to draw it back. Draw it back in. Hopefully this one will be all right. All right, so flat lows, yeah, I know they are sneaking up a little bit, but you can really see where the wicks are diving into. Buyers are happy to step in here. Sellers are happy to step in here, all right? Sellers control this level. Buyers control this level. So until we're proved otherwise and we get that nice strong breakout, let's use this as an example. Also, when you're looking at these levels where you've got support here, yeah, bearing in mind this is a daily chart, right? So intraday, you could scalp some nice longs off of this. Even, some partial kind of like some swings, right? But as you're coming into this area, I do also kind of like looking left and seeing if there is a consolidation that led to that move. Yeah, because if this was the area of balance, and as we start to look at it again, we can see in here, we can see these lows, right? And then we see these highs up here. Yeah, so when we actually just break out of this, again, just looking at the clear and obvious right here, anchoring it to the bodies, rejection here. So when price rejects here, I would be favoring a short at this point. I'd get stopped out probably. But then when we get this expansion above, you're saying, okay, right, well, now every time we kind of come back down to this area here and we highlight the consolidation, we're looking to get on board with those buyers, right? Because the buyers were the ones that changed the state of the market. They took it from a point of balance and ultimately drove it up so people are looking and willing to pay higher prices. All right, so they're the kind of principles that we're overlaying. So where we are at the moment, we are just in this range. Now, obviously, when we're in a range, we then want to break that down into tradable plays. I focus on the higher time frames on the show, right? Just because that's often, the time frames in which most people trade. So as we're looking at this here, if we're framing this now on a 4-hour chart, by the way, this was the high that we were targeting, right? Really nice kind of interaction with that, as we can see up here. Yeah, happened actually in the evening. We had the show around about lunchtime. Price drove up. Again, you want to overlay these technical factors with your support and resistance level, or your demand and supply. What we're saying is sellers control the market here. So when you start seeing these wicks come into these areas, leaving liquidity, happy days, they give you targets. But they often don't just reject from nowhere, right? They often take local liquidity as well. Let me draw this in properly. So I think we covered this Monday, but just to kind of reiterate, look, we've got this level that's been taken here. So when we had this rejection here, price came up, still swept out these highs, and then we started to break down. You're either a trader that likes taking these trades at the extremes, or you're somebody a little bit more like me, actually. I kind of mix it up depending on, volatility normally, but somebody that sees, a displacement rejection here, all right? So seeing price kind of come back down, but doing that on, say, a lower time frame. Do you like sort of like the 15-minute chart, for example, if we go back and look at some of these. I know we didn't really have this level too clean here. We wouldn't have had the range, but there's such a really, really simple way to just see the wicks that are coming into this level here and then start to see the points of rejection in here as well. Maybe you would have caught this, maybe you wouldn't have done, but just using it as an example as we come back into this area, you're either somebody that wants to be active at these initial engagements, so looking for real kind of wick rejectors. If you're a candlestick trader, looking for those higher wicks. A pattern that I really like and what I used to trade a lot, especially in traditional markets, right? But it works really well for crypto, is looking for this rise. Price kind of drives up, waiting for a pin bar candle. In this case, a bearish pin bar, or an inverse hammer, a very short nose. It's a long tail wick in for a bearish one to the upside and a small body. Think of it like a weight, dragging down. Craigie boy, hello, mate. Great to have you with us as always. Get a cheeky surf, you absolute beauty. Enjoy, mate. Very much enjoy. And then a bullish engulfing candle. So a little trick for any of you maybe that are a little bit newer to the markets. You can, honestly, these things can pay dividends as well. Or you can use like the double pin bar rejection as well, which would be more like this one here. So again, we've already got a wick forming, then a long upside wick showing absorption, and then a second long upside wick showing absorption, and it does become an engulfing as well because it's larger than the body of the previous candle here. Let me zoom in so you can see that nice and clearly. All right, now if you just try and blindly trade patterns like this, you're going to get absolutely obliterated, right? Because look, that's not a really great example of one there. I bet you it stitches me up now. But okay, I know it's come from not a great place here, but if you're looking at this, for example, you've got the pin bar, then you've got a second pin bar here that has a large body as well. But we're not really, reacting anywhere. We haven't got structure on our side. We are reacting from an inefficiency. But that doesn't matter because here we've already sold off. Sellers are controlling the market. We want to be buyers, at the other end. So we want to be buyers down here, remember, So if we were going to look at buying, for example, we come into this area, engagement, no long wick pin bar here, right? Maybe you get a little bit greedy. I wouldn't recommend taking these above the level, but maybe you take this one, pin bar, bullish engulfing, market moves against you, all right? But then you're back down in this area. And again, this is low, a little bit more of a doji, but pin bar engulfing, price looking to move higher. Pin bar engulfing, so you would have been out of luck on that one, all right? Pin bar engulfing, probably a 1.5 hour trade here. This is the nice one, pin bar engulfing, that obviously we can see would have been an absolute banger. But I'm not going to go on about this too much because there's loads of different ways that you can enter the market. In my opinion, the key thing is just still kind of taking a look to see where we can. Rave Song Records up early and catching the live. You absolute legend, Rave Song. Appreciate you, my friend. Still long either. Planning to add as well. Well, we got to take a look at that, Jojo. You know, I massively respect your trading skills. So let's get that one up on the chart in a moment. But hopefully that just gives a little bit of context, all right? Because I know it's really difficult. Everybody wants to trade and everyone wants to be active. But you just, unfortunately, the markets just want to be a lot more patient, right? So, you know, longs from here, shorts from here, shorts from here, longs from here. Look, just don't be disheartened if you start losing out, right? It just doesn't. Trading is a game of losses. Ultimately, it's about how you kind of fare out in the end. So as we got this here, we see it price kind of starting to break down here. We're not really getting, I mean, this was a really good sign in my opinion anyway, that we were going to start to get some form of rejection here because we got the 4-hour pin bar, but it turned more like a doji. Just really wanted to see that body a little bit lower. This is a little bit too much wick both sides. It's a long nose, that, for a pin bar candle. So we're going to see how this looks to play out today. Now, in terms of trading this for the local support, I think this area is doing a really great job, right? So why is this? Again, looking at that area where we have a consolidation before an expansion driving price higher, we have this nice gap down here as well. And we can see that we've got this kind of tickling into this area here. We're starting to see some buyers get involved. We haven't really seen that aggression to the upside here. If we pop the CVD on, yeah, nothing really kind of stand out on that either. So I think it's one of those things to be patient. But all of a sudden, you know, if I'm looking at Bitcoin and someone with a gun to my head today said, right, you've got to be trading Bitcoin. Fine. I'm trading a breakout of this level here, or I'm looking at what's starting to form in here, because we've got this trending move up, right? So from the low to the high, basically price, what's it doing here? It's in consolidation. Yeah. So again, look, start marking up these wicks and you say to yourself, all right, what point do we come back to here? Something like this. All right. And actually, if you go back to Monday's live show, and I think, yeah, we wouldn't have had it the week before, I think, because of Christmas, but take a look at Monday's show. Again, look at the difference in how these candles are reacting, yeah? Long wick showing absorption, follow-up bearish engulfing candle, price selling off. Now, that's a large bearish engulfing. You would want to be careful here because you're basically coming back to mid-range, all right? But look at the wicks showing absorption in these areas. And then look at how these areas just get massively disrespected, yeah, when the sellers lose control here. So basically, think of it like this. Imagine all these passive orders sitting here. Yeah, people are just so convinced the market's going down. People are just selling, selling, selling like crazy. Smart players are buying here, they're selling here, and this creates two large walls. When we eat away at that, yeah, and you gobble up all those orders, so there's, you know, buyers are just gobbling those orders up, ultimately value shifts higher, or the search for value shifts higher, and it also shifts in a seek for liquidity. So we look for the highs and we look for higher prices, and for those higher prices to get accepted. If the higher prices are not accepted, then we look for them to retest the previous areas they were considered value, and then we look to trade them the other way. All right. BC, Supreme Court ruling on Trump's tariffs this Friday said be cautious. Yeah, really cautious, because we know how much a tweet from that man can move the markets. And, you know, we're also a little bit, you know, we've had a bullish start to proceedings this week and that. So we just want to show a little bit of caution as we're moving through this. That's a really good heads up there. Thank you, Jojo. So a little bit flat on Bitcoin here. Like I say, this was the trade for me. The breakout, consolidation, long, yeah, or the rejection in here to trade it lower. So I'd have to look at this now on an intraday perspective, all right? And actually, intraday, I do like the 30-minute on crypto as well. You know, 15-minute, I think, paints a really good short-term picture too, but 30-minute, quite like how we can kind of read these, you know, ranges, expansions. Like this, for example, really beautiful and clear consolidation, price breaks out. Another consolidation happening in here, price breaks out again. You know, again, if you're going to use your volume on here, and you can use this for free on TradingView. I'm not suggesting you don't use other platforms. Like, other platforms will be more accurate. And if you're a traditional market trader, the paid data, obviously. But just looking at this here and saying to yourself, okay, price has had this expansion up higher here. Look how price kind of seeks to rebalance these areas of low volume. Yeah, all these low volume nodes, they're the areas that the market really kind of, you know, drives in here. See how they're drawn to them, but then we see these volume shelves. Yeah. So you see how the market comes in here, then you get this shelf here, then it dips in, you get this shelf here, so on and so forth. And then we've got our value area low. So that would be the line in the sand for me, looking for a reaction there. But ultimately looking for these volume shelves Or I really just got awful. Either the drawing tool has degraded over Christmas, or I'm just getting worse with it. Or you're looking at the value area high, and if we look again at the value area high with that volume node that's there, a high volume node, put that in green, you can see how even on that time when price breaks out here again. Remember what we're talking about here, this expansion, yeah. Like this isn't a breakout. Let me just zoom in for you. Not in my book anyway. It might be in some people's, and this isn't to criticize strategies. There's so many different ways to trade these markets. But look, there's just not the impetus. Look, 1, 2, 3 candles here. First of all, the first candle is the one to close above this box in that one large candle. Then you get another candle here that drives into this area. See, bears are trying to take control of this move here. Yeah, how do we know that? Because price opens up, drives high, and the bears drive it all the way down, but the bulls buy it and bring it all the way back to here, and this candle opens. Ultimately, those sellers have then been absorbed. So again, price coming back gives us an opportunity. But look, 1, 2, 3 candle breakout. Yeah, 1, 2, 3, 4, 5 candle breakout here. See how these big impulse moves happen quickly, sharply, aggressively. Now they're either being driven into passive buyers, passive sellers, or think of them as like sell or buy walls or resistance support, supply demand, however you want to look at it. And they've either got the strength to overcome that or they don't. In this case, they did, yeah. Come back to this area and then we smash into this higher time frame level, which is why it's really important to understand these levels across time frames. And then price ultimately sells off, right? So this at the moment is actually a leg that I'm really interested in, because price is a little bit kind of I don't want to say flat, because price isn't flat, and I can't really think of exactly what I'm looking for. But what I do know is we're back at this previous value area low, yeah, of this expansion range. I would have thought buyers would have protected that area better. And this is really messy because price basically sold off aggressively. So the overnight session yesterday, we were discussing all about just shorts from this here, right? So again, price being drawn back through these areas of low volume that we can see in here. We see the volume shelves. Actually, this low volume node here actually did a great job of drawing price almost back to the point of control. And then we see this volume shelf start to reject price in here. All right, so let me just show you very quickly how you can look at that. Watching a lot of these videos, something I'm really, really conscious of that I don't want to, put across is that we're kind of just cherry picking, because I know a lot of you will sit here and be like, and I would have been as well, and rightly so. So there's the volume shelf, low value node just above it. These are the higher volume areas. Sorry. You'd be like, well, why not this volume shelf here or this one here? Absolutely, you've got to monitor these coming up. I like to see price either reject heavily at the range low here. So, for example, if we had a really shallow pullback here, rejected the value area low, and this volume shelf after filling this node, I would still be happy to be active here on a lower time frame. Excuse me, just to give that some context. I hate it if I watch, I'm learning, or working with people, and you see things and there's, they don't really give the full context behind it. So if you've got any questions, please do just ask in the chat. So now we've kind of come down here. Price, ultimately, what do? We rejected from here, and then we create this new displacement leg lower. Okay, so again, whether you're taking volume, you can look at it like this. Price stepping back in the range. Again, look, these really nice kind of volume shelves here, right? Because I'm going to just draw this one in here. We have this kind of area of low value here. Well, not kind of an area of low value, definitely low volume. I say low value, lady, I don't know. Some weird kind of effect on my brain over Christmas, I think. And then, look, you got this nice shelf here, and you got this nice shelf here. And if you look at these, I'll just do this in a brighter color. You can see how they really start to press price down. Look, price coming down, see price come up into here. We're going to look at that on the lower time frames, how we could kind of snipe some entries there. And again, let's look at it just to keep this consistent. We'll say to ourselves, all right, no problem. Well, if we're going to look at entries here and we're going to look at entries here, I'll just mark these up. Let's just do so using the 2 candle pattern we just discussed here. Let's look for those kind of either, bearish pin bars in these cases, and, pin bar followed by an engulfing. So, yeah, to say like a 5-minute chart on here. So we can see in here, we don't get that pin bar. Unfortunately, price has that initial rejection. Not too sad here though, because, price ultimately coming off this really aggressive move higher. So as price moves down here, we probably would have got a short trade, maybe break even, maybe stopped out on this one, depending on where we would have put our stops, right? But then we can see here, right, there's 2 setups. I'm just going to hide that for a moment and bring that back. Yeah, there's 2 setups here. First, pin bar, bearish engulfing. So market entry at the end of the engulfing candle, stops above the high. So we get taken on the first trade. So we'd be 1R down here. And then we get the pin bar engulfing candle here. So again, exactly the same rules. Market enter here, stops above the high. I actually put it above this high, obviously, because we've taken that high now as well. And then in terms of targets, right? Now, on this one, for example, we know we've got the value area low here. I like these equal lows. That would be the first point at which I'd look to kind of take some profit here. So, okay, you open with a loser and then price comes back into here. And then if we're looking for the same setup here, yeah, we can see we don't get the pin bar followed by the engulfing. And here, to be honest, it's, you know, a little bit of a cheat, this one, because you get the doji followed by the engulfing, but it's really, really lovely momentum. What I do love about this, and a real favored setup of mine over the years, has been, you know, the inversion setup. I mean, we get this inefficiency. Yeah, so we get the gap up and then price closes through it on the way down. These can be really nice indications because, you know, these gaps are caused by this, you know, aggressive buyers, aggressive sellers, failure of order pairing, right? So one side's overwhelming the other. And then if we look higher, we can see we also had a pretty decent inversion setup here. All right, a lot of you that have been with me for several years will know about the inversion setups. It's shared really, really often on my channel as well. So this is where we sit at the moment, right? So ultimately, what does that mean for everything? Well, let's go back to the 30-minute and say to ourselves, well, actually, I don't really want to be short this here, but this moved down during London with quite a lot of strength. Let's look what happened. Yeah, so we closed out the session yesterday, and then this is midnight here. So Asia open, consolidation, small move up, price sold off. Price now left a gap. We retested this overnight. Price broke down. Now we've sold off again quite aggressively. So if we're looking at this here, we can measure the sell-off. Yeah, the impulse leg lower. And now we can see we're just driving here into the value area high. All right, little low volume nodes here, followed by this volume shelf. Quite a lot of low volume here, right, on the way down, which is to be expected with a displacement move like that. So any kind of drives up into here, again, I wouldn't really be looking to actively trade this so close to the New York session opening. But what does it do? Well, it gives us a set of conditions. Yeah, because on an intraday basis, yes, this is our high time frame area of rejection. But again, we're still looking for liquidity targets within this. So for example, if we violated this area here, I'd be really kind of eyes on these equal highs up here, because even though price could reject here again within our high time frame level, it doesn't mean that we can't drive up into it. So let's imagine we get something like this. We get a nice expansion of these areas. We see an initial rejection because this consolidation here is what's controlling the market. This is where the sellers are in control. So strong move above that, followed by retest. So we get our initial rejection. We start to get our absorption in here, the lower time frame setups. This is the kind of thing that we could take the play today. And this will be the more contrarian trade, right? This is obviously just an imaginary trade. I'm not saying put your stop loss there or anything. Because ultimately, you know, the expectation here is for further rejection. So the two available to us at the moment, considering our intraday structure, is bearish, all right? And we have rejected here, and we do have key liquidity resting below because we have sold off. But again, you know, this is our area of support or supply, but this is our liquidity target. Yeah, that's where the low is. That's where the most clear and obvious liquidity is, where the price is probably going to drive. You can also use volume and bits and pieces like that as well, which will give you a clearer indication. So rejections within here, again, rejection at value area high. We filled this low volume nodes here and kind of coming back down below this shelf. We can look at this at the moment. Again, wouldn't take this trade here purely because we're in between sessions. We're about to go into the New York pre-market. Shortly, we get that injection of volatility. You can just get caught a little bit offside there with those type of trades. We're not really seeing any major impetus to the downside. The first, as we can see on here, we got this pin bar candle, bearish engulfing candle here. So maybe if we'd been a bit earlier to this, and especially if it had been within the London session, you know, entry here, and then you probably point of control would be a good target here to trade that off. Again, understanding the sessions we're in, we're just at the end of the London session now. London is actually, you know, you wouldn't think it to look at the session here, right, with this big sell-off, but London's actually a lot more famous for having consolidations. New York is really the session that we look for in terms of the higher runs, and there's obviously some caveats with how we apply that to crypto. So hopefully that has been of interest. Now, I've had a couple of chart requests come in for Ethereum, Solana, I think one for AVAX as well. I'll check in a moment. But if you do have any guys, and when I say guys, I mean guys, girls, anyone, however you identify, please do let me know, and I will take a look for you. If not, I'm going to jump across onto Ethereum. Let's take a look at that beast, shall we? Actually, let's do the. A lot of people will be on this one, won't they? Right, okay, let's not do this one because it's a teaching chart. So there we go. Here's our good old perp chart. Right, so again, look, really big expansion here. So my eye is immediately drawn to this consolidation. All right. And as we look really at the extremes of this, and this is where it can get a bit tricky sometimes because you're looking at this area, right, and you're looking for a breakout of this. What I favor doing is this. Yeah. I'm just trying to get the amount of wicks in that I can. You can obviously draw it right to the high of the wick or fix it on the body here. The key that I'm trying to make here is that whether you're focusing just on these little wicks here, trying to get as many in as possible, or you're focusing on the high of this expansion through this area of resistance should be this obvious. Yeah. So what do we get? Large expansion, consolidation. Normally, if you see a rejection, it happens fairly quickly. Consolidation above resistance is normally, or above, resistance in this case, or below support. It's normally a good thing. Good example of this actually is right here. Yeah, so range low, look quickly as we came in here. There was no real time spent, was there? What did price do? Quickly got back in the range, consolidated and expanded to range high. And this just didn't really stop. But you would have had probably from this point on here, say from the 31st of May until the breakout on the 12th of July. That's a hell of a range to be trading, right? So understanding these levels is so key because every time you're trying to trade a breakout from here and getting wiped out, it's probably due to a lack of understanding of the state that price is in. Are we ranging? Are we consolidating? First thing I ask myself when I come to the charts every day, or are we in balance or out of balance? Okay. So anyway, this I think is going to be quite a key draw. This was the point of breakout. Yeah, we can see price come back in, really just kind of tickled into these highs. Yeah, so again, we kind of take the main wicks, see this as more of a deviation up here again, or if you want to, you can draw it up to the bodies, right? Then you can see price now is holding this area. Why is that important? Well, just think about it just from a logical perspective. And for anybody that maybe doesn't understand this, I really recommend going and studying like auction market theory. Yeah, price is just always in an auction. And imagine an auction house with an auctioneer there. They're trying to sell something and they start the market and they're like, I'll take $1 for it. And the demand is really high. $1, okay, $1, $2, $3, $4, $5. Can I get 5? Can I get 6? And then price just explodes 8, 10, 12, 15, 20, and it's going up and up and up. Versus an auction, when it starts and somebody says, right, can I get $10? Anybody willing to give me 10? Can I get buyers at 9? Can I get buyers at 8, 7, 6, 5, 4? Bang, buyers step in at 4, right? And if you start that auction again, then the interested buyers step in. Okay, well, now I've got 4. Maybe someone wants to give me 4.5, 4.5. I'm seeing 5, 5, 5.5, 5, 6, 7, 8, 9, 10, etc., right? And you're very welcome for the terrible auctioneer impression. Apologies if there's any of you out there that I've deeply offended. So when price gets back to these levels, we're interested, right? So now we look up and we're actually, we were saying about these longs here within the Discord at TBN, right? And again, big reason as to Pit and Trading Tank, people like that catching so many good longs. I'm lagging behind at the moment. I work on the intraday front. So for me, it's been a little bit of a slower start. Caught a nice couple of trades on ES yesterday, but these guys are absolutely tearing the face off crypto with very, very similar principles, right? Just seeing where the buyers and sellers are. So as I look at this here, right, we were looking at how ETH just had a little bit more room to run compared to Bitcoin. Now we can see we've got a high here, then we've got these lower highs around here, right? So when you've got this kind of situation here, there's clear resistance here, no doubt. All right. Then price kind of spikes above it here, and it does kind of come back down below. So again, if we extend that up to include the bodies here, even to show that this is the deviation. Again, I would still want to see price displace through this, strong closes through it, but it's just kind of giving me a shallower area to kind of say, okay, trading plan set up for the day. Jojo, yeah, of course we can. Just remind me, I'll take a look at Kai. So this is where we got the rejection. Now, something that is interesting for me here is this is the consolidation, right, that led to this move lower. So we do need to be a little bit cautious with this up here. And again, if we focus on the leg lower, We can see the value area high sits here, value area low sits here. Nicely aligned with our range, right? Bearing in mind I've just drawn that from the high to the low of the move. Then when I've got one extra candle confirming the actual swing point of the low, I then extend it to that point, right? Just to get that little bit more data. But then I want to keep this fixed here because I want to understand, excuse me, where the participants were at their strongest. So this is the point of control, right? So again, you can see that here. This is where the most trading took place. So price broke down, traders loaded up to the short side here and sold off. We had this large low volume node, value volume, really struggling with both of those this year. We got the low volume node here and the value area high followed by this volume shelf, right? So in terms of this, what does that mean? Well, we could be driving up here into more resistance. Well, how will we know that? Well, we just trade what the market gives us. You want to see this strong move up here, and then you want to see price pulling back either into these volume shelves and drawing back to the low volume nodes, or looking for the classic support resistance flip, and you can use candles for that as well, for example. And that's the cleanest breakout play for me today on ETH. That's what I'll be looking for. If not, favoring like a little bit of a corrective move back lower here. Nothing's crazily clean there. Let's just take a look at the 4 hour quickly as well. Yeah, kind of price just grinding into this consolidation here as well. We did just tag into this as well. Yeah, this was the 4 hour consolidation. Price had this rip to the top. Price just trying to find value here, moved up, classic swing failure. Then we saw the drop. Yeah, and again, look, rejection at a resistance level with displacement. We're looking for the retest of these inefficiencies. Rejection, displacement, inefficiency, retest, rejection, inefficiency, rejection, inefficiency. All right. It's not a magic thing because it doesn't work all the time. Nothing does. And also it doesn't mean you'll necessarily get an answer because you might try and short the market there, for example, and again there, and you've stopped out twice before you think, oh, this thing isn't going down. And then you forget all about your bias. You go, damn it, market's wrong, get all emotional, long it, and then it does that. All right. So you might lose a couple of trades before you grab that. So don't forget that when you're trading on, especially on the lower time frames. Then we see this nice consolidation here. And again, this is where we get those nice we see those cleaner highs come in here and here. So then we've got this little bit under here as well. And we kind of say, so we see some support through here, some resistance through here. And even if you drag this back a little bit, right? Support, resistance, you can kind of see the interaction between the two. So this makes up quite a nice target here. We can also look, this kind of creates a new dealing range, but does create, because you kind of you're delivering bearish through here, right? And this is where the structure's broken, price starts to move to the upside. So we can look at this kind of whole leg here, which I would take from the expansion here up to the highs. Right, we can see lack of displacement as price is coming through here, but this is of interest. We've got this consolidation here. It's supported price once on the way up. We can see, obviously, we've got this volume shelf here as well. I'm wondering now with price if we're going to if we start to reject here and we start to displace down, stepping back in this level here would be of interest as well, right? Because you can see how it perfectly pins the resistance. Resistance, price moves above support, and then we move higher. So favoring intraday at the moment, a bit of a further pullback here on ETH, but ultimately I think, pop back to the daily. I think we've got some really nice kind of clean levels here if we're looking for a breakout. Yeah, again, high energy move, price to draw back. If we quickly get back in this range, then I'll be looking to short this lower and assume that we kind of stay within this range for a little while longer. Let's look at Kite, shall we, for our friend Jojo. Right, let's have a look. What should we go on? Let's have a look at the old. What are you shilling me into here, Jojo? Let's have a look. God, don't want the premium index, do we? I wonder if we've got more data on the crypto chart. We don't have volume, do we? Which is annoying, but so you really throw me a curveball here, right? Let's well, if that's the most amount of data that we're going to get, yeah, which I suppose it is. So let's look with our friends over at Bybit, shall we? Okay, so on the daily, interesting one, obviously, large sell-off. Again, high energy move down, gapping through here. Yeah, if you take your volume profile sometimes, I mean, you should definitely be able to spot the gaps here. But the great thing about volume profile is, and this is a fixed range volume profile, right? So from point A to point B, just taking it from the high to the low, and then I move it across one candle when the low is confirmed. Obviously, if I was looking to trade the immediate rejection, I wouldn't do that. I would keep it as this, and you can still see the same. Look at how price is drawn in this wick into these areas of very low volume, and closes below the volume shelf. It's showing us that we're still kind of, being suppressed here. So, that doesn't tell us a great deal there, but obviously does show us that aggressive move down, price now being pinned down here. We haven't really set any kind of range there on the daily. I mean, all I can really ascertain from this is that we're at, we've probably got a fairly key point of resistance here that seems to be building. Yeah, just based on the fact that price has kind of seen some rejection through here. And actually there is confluence as we go back. Price scythed through this area, rejection. Look, strong close above, retest, price goes up, finds support, breaks down, resistance. But we are really grinding into this. We're not really seeing any pops on this. Kite on Coinbase. Nient problemski, my friend. Oh, great. So you robbed me of my inefficiency now as well, Joe. So was this deliberate? This was deliberate when I said you were stitching me out, didn't you? And I found my nice inefficiency to run this off. I mean, this is even messier, but we've still got the same. Again, if I kind of link it onto this to this, draw this back across here, still very similar, right? If you do look at this, real wick rejections coming here till we get that close above, then the absorption comes from the lows, showing us that sellers are getting absorbed, buyers are stepping in. We see the wick rejections here. Price fails to hold this level after some, decent absorption, but again, look at the absorption when we're setting things like pin bar candles, meaning that sellers getting wrecked, buyers getting in control, and this is where we close, so this is showing that the impetus is with the buyers. This at the moment showing me that impetus is more with the sellers than anything. I know we're on a daily here, but if the daily, for example, managed to close this as an engulfing candle, something like this, right? Then we've got the pin bar rejection here. It is a long nose, I know. But I think that could be, just showing that price wants to come down and start to attack some of this liquidity that's been building here, right? When you see these slow, grindy trends on the way up, you'll see people draw them as rising wedges, and that you do have a higher percentage chance that they drop out of the bottom than out of the top. However, I'm more interested in the obvious liquidity that's resting between here, because if you can't get the conviction from the buyers, then ultimately, the market could look to drop. It's difficult when the price action is, quite balanced like that. So we're going to drive this down onto the 4 hour. What do we have here? It's quite a rejection candle in there. Now, obviously, we've got this resistance level here, which we know about. So what I'm going to do is I'm just going to make that really light grey. So it just kind of sits there, maybe too light for you guys, actually. Sits there in the background, all right? Because now what I want to look at here is I'm saying, okay, well, where was there impetus from buyers or sellers? Where did we really kind of change structure? Where are we moving? Where do we see those gaps? Where have we seen that, that commitment? And obviously this is a really good example. In here, what we're tending to do is kind of grinding up, ripping down to take liquidity, trapping sellers, moving higher, grinding up, ripping down to take liquidity, grinding higher. Looking at this here, it's a very, very messy chart. So if I was going to draw in terms of looking as a range for rejection or for support here, I'd say something like this in terms of an area, and it is messy. Basically overlays almost perfectly, right, the resistance area that we set here on the daily. So if we're looking at this here, price came back in, pin bar, engulfing arrow, took us to the highs, back down to the lows, to the mid, lows to mid, lows to mid, mid holds, up to the highs, mid holds, up to the highs, rejecting back down. Looks like the mid is starting to hold here. So again, now I've just got a playbook here for Kite, which is strong move above, now looking for this area to hold. And what I mean by that is I want to see something like this. Not necessarily on this time frame. I want to see a strong impulse move on this time frame here, but then I want to see some lower time frame consolidation here, or some real aggressive buying stepping in to say, okay, we're going to take it at least to this wick here where the obvious liquidity is resting. If we get this move and then we get that fast move up, and we reject heavily here, so like we did with this, for example, and close back in, then we look again for these retests. So large move up, move back down, look for the drawback, and then we trade this down to the lows. I would also be looking at these lows in here as well. In terms of looking at this, from a higher time frame perspective, if I was going to want to kind of invest in this, I think I'd probably look at the same kind of principles. If we look back at this level here, we see this large expansion here, and then price really started to hold this level before it drew higher. We saw the same thing here with a large expansion off the lows, price holding this level. Ultimately, it couldn't come to fruition this time. But then even if you lose money on that position, right? So if you're getting about it from a spot perspective, but looking at this as a futures trade, even if you're drawing up here and you're long bias, remembering that you've had the expansion here, you're looking for your long trade there on a shorter time frame, right? So the chances are very high you make money here, but let's imagine you don't. Then you see price come back down into the lows here. We don't get that displacement up here, but then we get the displacement below. And as we draw back into this gap here and retest this level, we can see price selling off. There's no magic about this, guys. There's a lot of chart time, I appreciate. And apologies if I do go through these things too fast sometimes, but I'm just, just using my eyes to kind of say, okay, what does the higher time frame say? Yeah, this looked a little bit messy when we drew it in, right? But you can see the wick starting to build under here. If I haven't got something cleaner in the medium term, then I really do want to focus on what's happened in the shorter term, because this is ultimately what's preceding whatever move we're about to make here. So we're holding a short bias into these lows at the moment because of the rejection within here. But any strong breakout would change my mind here, reholding this level and then looking to push up higher. What else did we want to take a look at? Let's take a look at Solana, shall we? Okay, so a little bit of a similar story here. Let me just give you some context around this. Just a very arbitrary line, just showing. I was working with a student on this recently and just looking at just mapping out, okay, where's the really obvious, where are all the wicks coming down? Yeah, where are the wicks coming up? We only really had this one to play with here, but we're looking at this being the rejection point and then saying, okay, well, price is kind of driving into these here, right? So we know we've got an area. It doesn't have to be this exact line, right? You can see these things still come into context later on as well. But I do prefer a little bit of recency here. And what I like about this, again, I don't have any real clear immediate support levels down here, right? I've got a wick up here that's miles away from this one down here. There's kind of this one here as well that's a little bit above here, but can you see how these are just, there's this spike into it here. So something's found buyers here. That's what really interests me, because sellers were very aggressive here and we saw that bounce, right? So what am I doing? Always look left, yeah, ALL. And then we want to look and say, okay, where was the base and the major catalyst for this move higher? Yeah. And you've got the breaker in here, which was the last up move before price swept liquidity, and we had an aggressive reversal. But if I'm looking at this whole kind of area, I can see this small consolidation here played a real initial important role in sending price higher. So, we're driving down into an area of support here. Yeah. And if we're using this as confluence as well, and we're saying, okay, well, this is where the buyers really stepped in here. This is where they're going to want to defend. We take our level out and say, okay, well, I would say that this for me seems like a pretty obvious area. Price finding all the rejection here. This is the consolidation. This is the move above. This is the retest. You could move it lower onto the bodies if you would prefer as well, right? Again, got a little bit of confluence back here. Price driving into this area. Buyers trying to take control. Sellers winning out. Price ultimately then, what does it do? Displaces below the level, gaps below the level. We get the retest and price sells off. So we know we've got a level that previously buyers and sellers found of interest. So as we then draw back into this area, I'm just going to draw another one here, just down on the lows of this consolidation as well. Yeah, so from the body high down to the low of this wick. And it also kind of gathers the data here as well for this kind of area, right? Then we're looking at this to be the deviation, and then for price to move higher. So then as we're moving forward into this area here, we can see price driving in, again, even coming a little bit lower down into this area of demand that was set. Very quick flash reaction and V-shaped recovery. So as we look at this, we can get rid of this one now because we know that's not particularly relevant. We're back above this at the moment. So what we have done here on Solana is we have had this nice impulse move. All right. Now, if we're looking at this from I'm going to take it from this low to this high, and I'll tell you for why, because before that we were in this consolidation. We'd started to form this consolidation here. Yeah, high to low, something like this. And then this was the breakout, and this was the consolidation that led to that breakout. So my main interest here is where these participants the behavior of this move higher. So as I look at this here, I've got an area of support. Yeah, this is where we expect price to turn in. We can see the upside wicks here rejecting price previously. We now had this strong impulse move higher. So price drawing back here, to this nice volume shelf, low volume nodes in here, volume shelf in here, value area high. That's looking pretty nice in there. In fact, if I draw that over this kind of area as well, I think this gives us a nice area to look for price to draw back to and see if we can hold this. Yeah. And then move higher. So I really like that on Sol at the moment, because the other thing as well is that as we look here, we've got this as the high, but we can see after this aggressive sell-off, price started to range. Yeah. So if we were to just draw this in by hand, I mean, this is so clean and clear, this range. I mean, it's unbelievable, actually. Because look at that, just taking over there, looking at the wicks, we get those touch points. That's beautiful. So what about this for a move? Draws back into here, holds this area, turns resistance to support, and then we move higher. I absolutely love that. And then we've got the kind of range low here that we deviate out of, climb back into. If we climb back into this range here, remember when we're drawing a range, when we're trading a range, if this is our range, for example, what happened? Price broke out. We failed with displacement. We did get an underside retest. Price sold off again. This ends up being a deviation. Price steps back in the range, moves higher. We've now taken out the midline. So a drawback to this and then pushing onto range high will tell us, do we get a continued rejection of this level, or do we see that high volume breakout? You can see here, right, when you start to get these wicks going up, quite often you then get that follow through and price move lower. It's not say just look for a wick, but if you get a wicked daily close, open the next day, mark out those key levels and see where you want the buyers to be defending before you flip to a short bias from here coming lower. You just want to see price slice through this, like we would say, like a knife through butter. All right. And then we take our volume profile here. I'm just going to delete this quickly. So I want to know what happened on the move lower. All right, so initially we had this data as price came in and looked like it was holding this level, price getting pinned under the point of control here, and ultimately look what happened in terms of this being the area of low volume. I'm just going to do that in red. That's what's drawing price higher along with the POC. And then I'm going to do this in a bit more of an obnoxious color, so it stands out. But this is our volume shelf here, right? So again, see the area of high volume, just this is where the trading taking place. The battle lost. Obviously, if you're a bear, if you're a bull, if you're a bear, you're happy. And the same here, driving in, and we're currently getting that rejection. So can you see how we just built this barricade here? Yeah. So again, strong moves up above this. Want to see this, then this area retested into, and we get this beautiful new leg high. If not, we look for rejection here and trade it lower. But at the moment, I'm hoping price kind of comes back to this area here so we can look to get some buyers in and then drive it back up into these levels. But I will be super cautious when we get here. Just to finish off, guys, we've got 1 minute left. Just to look at the dollar index today. So we see the DXY. This is the dollar in a basket of other currencies, slightly heavier weighted towards the euro. Something us traditional market traders look at a lot, but also you really should for kind of crypto. Seeing strength in the dollar at the moment. Actually is currently trading completely flat. We'll see obviously more impetus come into that as we see the New York session open. We've got pre-market in 30 minutes and then equity or cash open in an hour and a half. The volatility index is up today, but we're still trading comfortably below 20, meaning that conditions are normally quite good for risk assets below this. I mean, we're comfortably down there. We're still below. We're not quite below at 15. Actually, we've snuck just a hair above it, but we are nice and low in that. Craigie boy, you're welcome. You have to tell me where you're surfing as well, mate. Thinking about doing that here at the moment sounds like absolute madness, but yeah, awesome. And then looking at the Mag 7, we had a real mixed bag from them yesterday. These are the key contributors: Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla, to the indices, which are like the S&P 500 and the NASDAQ. And if we're looking at those, God, there's going to be a lot of annotations on this chart. Actually, hang on, I was teaching on this the other day. I think that's why it's going to take a little while to load. But that's okay. You can get the idea. Look at this monster. It is just grinding higher. All right. And moving averages, everything just supporting that. It looks absolutely beautiful, doesn't it? So, okay, guys. Obviously, do be cautious out there. We can see as we look across here, we've got some outliers, but crypto down a little bit across the board. But I do quite like these dips, especially I would say on Solana. I quite like that. Yeah, VIX is higher, high, high, low. I don't like that either, Jojo. I must admit, even when that's sneaking up, even when it's that low, it just wants to just do some damage, doesn't it? Anyway, guys, thank you so much for everybody that joined the show today. I'm wishing you all a very happy New Year. It's been wonderful to be back with you this first week. We had a great show on Monday. Got some lovely comments and bits and pieces from everyone. So thank you very much for that. And looking forward to taking the year head on with you all. Please don't forget you can come and join us over at the Bird Nest. We are still running a winter promo at the moment, or we might not be. I'm not 100% in truth, but if we're not, come and tag me on Twitter, BC_Richfield, or anywhere you can find me and just say, yo, BC, you said I could have 20% off. I'll say you absolutely can. All right. Anyway, legends, thank you very much for your time. Have a fantastic week ahead. Do keep an eye on the news. And as Jojo kindly informed us, do remember about the legal update that we're going to get on the tariffs in the US on Friday. All right. I look forward to seeing you all out there and around the nest. Take care, everyone.